All right, let's dive right in. In today's market scan, we are breaking down the biggest movers and shakers. And believe me, there's a lot to cover. We're talking about huge corporate giants teetering on the edge, some absolutely wild volatility in crypto, and we're going to take a serious look at the risks that are piling up on the horizon. So let's get to it.
First up, a story that's making major waves in the retail world. A really big name is taking a serious hit. Yeah, Eddie Bauer's operator has actually filed for bankruptcy. And honestly, it's a textbook example of a legacy brand that just couldn't keep up with the times.
But here's the thing, while one old-school brand is collapsing, you have this completely different story playing out in another part of the market. We're seeing some unbelievably bullish calls. Check this out, $150,000. That's the price target analysts are sticking with for Bitcoin. This contrast, right here, this is what today's market is all about.
And that really sets the stage for the big question on everyone's mind. What is Bitcoin's next move? It's been hovering around that $70,000 mark after taking a bit of a dip. So is this a red flag, a reason to be worried, or is it the buying opportunity of a lifetime? Well, the crazy part is the data is pointing in two completely opposite directions.
Okay, let's get into our first section, corporate and policy movers. We're going to navigate the shifts in legacy retail and some big new regulations. And this slide just says it all, doesn't it? The old guard versus the new. On one side, you've got Eddie Bauer, whose operator is declaring bankruptcy because, let's face it, younger consumers just see it as old-fashioned. But then you flip over to the other side, and you have a tech company like Dynatrace. Their shares? Climbing. Why? Fresh market data. This is a perfect real-time snapshot of money moving out of the old and into the new.
Now, let's talk policy, because there's a new initiative out of Washington that's got everyone's attention, TrumpRx. The idea is to directly lower drug prices, which sounds simple enough. But the healthcare industry is pushing back, questioning its whole structure, even its legitimacy. And for investors, well, that just injects a massive dose of uncertainty into the entire healthcare sector.
And it's not just policy uncertainty shaking things up. We're also seeing major reputational risks come into play. You probably saw the headlines about Howard Lutnick's testimony. He was quoted saying he barely had anything to do with Epstein. You can bet investors are watching this one like a hawk, especially with the huge focus on corporate governance these days.
Okay, time to switch gears. Section 2, the Bitcoin tug-of-war. And that's exactly what it is. We've got these conflicting data points that are creating a super volatile landscape.
All right, let's start with the bearish side of the argument, because the numbers don't lie. $264 million. That's how much money flowed out of Bitcoin funds just last week. For a lot of traders, that's a huge red flag. It signals that sentiment might be turning sour, especially coming right on the heels of that price dip.
But just when you think the story is clear, you get this. Analysts at Bernstein are coming out and saying, hold on a second. They're arguing that the current bear case for Bitcoin is, and I'm quoting here, weak. They just don't see this recent sell-off as the start of some big downward spiral.
And they're not just talking a big game, they're putting a number on it. $150,000. That's Bernstein's price target for Bitcoin in 2026, and they are not backing down. So you see the conflict, right? You have short-term data showing money leaving, clashing directly with this incredibly strong long-term conviction, and that is what's fueling all this volatility we're seeing.
All right, on to our next section. Crypto's ecosystem in flux. Because it's not just about Bitcoin, right? We're looking beyond it at innovation, regulation, and a whole lot of debate.
And speaking of debate, Ethereum's co-founder, Vitalik Buterin, has been making waves with two major calls to action. First, he wants to build an Ethereum-led alternative to what he calls the race for AGI, basically a decentralized approach to artificial general intelligence. And second, he's making a big push to defend real DeFi, true decentralized finance, from these more centralized stablecoin models like USDC. He's really drawing a line in the sand about what the future should look like.
And this push and pull is happening on the regulatory front, too. It's fascinating. On one side, you have pro-legislation voices like Patrick McHenry, who thinks a deal on crypto rules is right around the corner. But on the complete other side of the spectrum, you have firms like Polymarket literally filing lawsuits against states like Massachusetts to fight back against potential bans. So are we moving towards cooperation or confrontation? The answer seems to be yes.
Okay, for our last section, we need to talk about risk. The expanding risk radar. Because what we're seeing is a pretty scary intersection of digital threats and very real physical ones.
Just look at this chart. The growth in signature phishing attacks is absolutely staggering. We're talking about a very specific kind of attack aimed at crypto wallets. And in January alone, it jumped by 200%. That's not just an increase, that's an explosion. It's a hugely concerning trend.
And this isn't some abstract technical problem. We're talking about real money. Over $6 million. That's how much was lost to these phishing attacks just in January. So a cybersecurity threat has become a direct, significant financial risk for anyone in this space.
What's more, these digital threats aren't happening in a vacuum. You've got major global security flashpoints popping up, there's an intensifying arms race in the Indo-Pacific, and get this, in France, police arrested 6 people for a crypto-related kidnapping of a magistrate. You see what's happening? These events show that the line between geopolitical risk, digital risk, and physical security risk is getting blurrier and blurrier.
So let's wrap this up. What's the big takeaway today? I think it's that we're in a market that is just full of contradictions. It's old guard versus new tech. It's bearish data clashing with really strong bullish conviction. For anyone trying to invest in this environment, vigilance isn't just a good idea. It's absolutely essential.
And that really leaves us with the million-dollar question, doesn't it? In a market that's pulling in so many different directions at once, a market just filled with contradictions, how do you separate the actual signal from all of the noise?